Welcome everyone. Good morning. Thank you for joining today's webinar. If you are muted and you do want to say something, feel free to unmute yourself, but if you can keep your microphones on mute just while we're going through the presentation. We are recording today's session, and so we'll send out a link to all members in the next couple of days as well if you do miss any part of it. My name's Summer. I'm the Projects and Events Manager for MPAQ, and today I am moderating the webinar. It's great to have so many of you here today. Today we're going to be talking about the changes and updates that have come about since 1 July 2025. So that's including the minimum wage increase, superannuation guarantee increase, paid parental leave entitlements and QLeave requirements, along with other key updates for employers. We've got a couple of speakers joining us today. We've got Clinton, he's the Senior Workplace Relations Consultant, and he's going to help us navigate the changes. And we've also got Mick, who's a Senior Stakeholder Engagement Officer from QLeave, to guide us on the QLeave requirements. Clinton and Mick, thank you both for joining us today. If you do have any questions throughout the session, you're welcome to use the raise hand feature if you're comfortable voicing the question out loud. If not, feel free to use the chat and we can come back to those throughout the session. If you're watching on the recording a little bit later, add the questions in the comments and we'll get Clinton or Mick to answer those post-event as well. But that's enough for me. Clinton, when you're ready, you're welcome to take over.
Great. Thanks, Summer. Good morning, everyone, and thank you again for attending today. As Summer was saying, today what I wanted to do is provide a bit of an overview as to what has the changes, as you would know. And as you would know, every July or 1st of July, the Fair Work Commission presents or provides an increase when it comes to the minimum rates of pay. And of course, that would have quite a few implications when it comes to rates of pay for your staff, especially majority, if not all of your staff would be covered by modern awards. And of course, when it comes to the minimum wage increase, it could also have broad effects to other entitlements that employees could potentially be entitled to. So what we'll do is we'll go through that today. But yeah, so when it comes to the minimum wage increase, as you can see on the screen, well, the new national minimum wage applying from the 1st of July is $948 per week. And so that's based on 38 hours, 38-hour week, which is for a full-time employee, or $24.95 per hour. So this is an increase from the 2024 to 2025 rates, which were $915.90 per week and $24.10 per hour. And for casual employees entitled to the national minimum wage, as per the new minimum wage increase, they will receive at least $31.19 per hour, which includes the 25% loading, given that they're casuals. And the 3.5% increase also applies to the minimum wage rates within awards. So about 20.7% of all employees in Australia are paid at the minimum wage rates in industry and occupational awards. So just to be very clear, the increase applies to the base rates of pay, which would be the minimum rate of pay, and then through there it would have an impact or effect to the minimum rates of pay that would be covered under the award. So when I refer to the $948 per week, that is the baseline or the minimum, because of course under modern awards there are other minimum rates that would apply depending on coverage. So in terms of the rationale, like I said, it's a 3.5% increase. And the principal consideration that guided the Fair Work Commission's decision is the fact that since 2021, the real value of modern award wages has pretty much declined by 4.5 percentage points, which is relative to the inflation measured by CPI. So the continuation of this inflationary episode has meant that over the last 3 annual wage review decisions, the Fair Work Commission has repeatedly deferred taking any action to reverse this ongoing decline in real wages out of a concern that this might result in the further persistence of like a higher inflation. So the result has been that living standards for employees dependent on modern award wages has been squeezed, and the low paid have experienced greater difficulty in meeting their everyday needs. So this information is provided in the order when the minimum wage was increased on the 1st of July. They also outlined that modern awards have wider practical applications. So approximately 20.7%, as I said earlier, of all employees in Australia are paid at the applicable minimum wage rates in the 121 modern awards and occupational awards that are currently in operation. And accordingly, such employees and their employers are those principally affected in a direct way by the Fairer Commission decision. So the modern award reliant workforce has characteristics that are markedly different from the workforce as a whole. So what they pointed out is that the workforce is disproportionately female, and more than 2/3 of such employees work part-time hours, more than half are casual employees, and more than a third are low paid. And because of the part-time and low paid characteristics of the modern award reliant workforce, well, then the wages paid to them constitute only about 10.5% of the national wage bill. This means that the direct effect of the annual wage review on wages growth across the whole economy is limited. So this modern award reliant workforce is not spread evenly across the economy, but is concentrated in certain sectors of the economy, meaning that the review has more marked effects in these sectors. So 4 industry sectors with the highest numbers of modern award reliant employees, namely accommodation and food services, healthcare and social assistance, retail trade, and administrative and support services, accounts for over 2/3 of all modern award reliant employees. So in other sectors such as mining and finance and insurance services, the proportion of modern award reliant employees is negligible. So that is a basis for the increase of 3.5%. The focus was to provide an uplift to the modern award employees that are most greatly impacted, being the sectors that I outlined. So accommodation, food services, healthcare, social assistance, retail trade, and administrative and support services. And some additional information. So the Reserve Bank of Australia's assessment that inflation has sustainably returned to its target range of 2 to 3% indicates that this inflationary episode is now over, and that provided the Fairer Commission with an opportunity to go at least some of the way towards correcting what's happened over the last 4 years by awarding a real increase to modern award wages and the national minimum wage. So the Fairer Commission was concerned that if this opportunity is not taken in this review, then the loss in the real value of wages which has occurred will become permanently embedded in the modern award system, and the national minimum wage and a reduction in living standards for the lowest paid in the community will be pretty much entrenched. So of course, when it comes to these increases, it also provides increases to other factors. So I'm sure, or not, some people would have heard the high income threshold, or what that means. So the high income threshold operates as a limit to an employee's ability to be protected from unfair dismissal under the terms of the Fair Work Act. So if an employee is not covered by a modern award and an enterprise agreement does not apply to them, then they must have earnings of less than the high income threshold to claim unfair dismissal. So what do I mean by earnings? Earnings include wages, such as other amounts, if any, worked out in accordance with the Fair Work regulations, amounts dealt with on the employee's behalf or as the employee directs, and the agreed money value of non-monetary benefits. So earnings do not include payments that amounts of which cannot be determined in advance, such as commissions, incentive-based payments and bonuses, or overtime, except guaranteed overtime, reimbursements, and compulsory contributions to a superannuation fund. So the previous high income threshold was 175,000. Now the high income threshold is $183,100. So that means that if an employee is award free, so not covered by an award, and they make more than $183,100, well, then they don't have access to unfair dismissal. And of course, when it comes to unfair dismissal, not sure if any member is aware of that. When you think of unfair dismissal, it's when an employee can lodge a claim with the Fairer Commission on the basis that they believe they've been terminated on grounds that are either harsh, unjust, or unreasonable. And usually when it comes to compensation, there is a cap to how much an employee can seek when it comes to unfair dismissal. So that's 26 weeks, or the lesser of the the compensation cap, which was previously $87,500 or $91,000, and what is now, it's currently $91,550. But I'll go through that a little bit more just to expand on it. So it's important to know that most employees, when it comes to unfair dismissal, only receive a small amount of compensation for making an unfair dismissal claim. So the median is between 5 and 7 weeks pay, and less than 0.4%, I believe, of applicants receive the maximum limit of the compensation cap that the Fair Work Commission can order an employer to pay. So the maximum that the Fair Work Commission can order is the lower of these two amounts. So half of the employee's annual wage, which would be 26 weeks, or the compensation cap, which, as I said earlier and as on the screen, is currently $91,550. And furthermore, the Fair Work Commission may reduce the amount of compensation. So it's just something to be mindful of, is that if you ever go through an unfair dismissal claim and you go through arbitration and then there's a decision or an order all the way to the end, well, then the Fair Work Commission may reduce the amount of compensation if it finds that the employee did not suffer any financial loss from the dismissal, or the employee deserves a lower amount because of bad behavior, so like misconduct. But that's just an interesting tidbit to be mindful of. But yeah, so the cap now has increased to $91,550. And of course, the maximum that an employee could seek to earn or get making an unfair dismissal claim is 26 weeks, but less than 0.4% of applicants receive that maximum amount. So for super, so as of the 1st of July 2025, it is 12%. So previously it was 11.5%. And superannuation, is paid on ordinary time earnings. So ordinary time earnings is the amount you pay employees for their ordinary hours work, including things like commission and shift loadings. And generally, superannuation is not payable on overtime, as it is work completed in excess of an employee's ordinary hours of work. So as you know, the superannuation, tongue twister, super guarantee charge applies when employers don't pay the minimum amount of super guarantee for their eligible employees to the correct fund by the due date. So this increase of 12% marks the final adjustment to the superannuation guarantee rate under existing legislation, following an annual 0.5% increment since July 2021. So the super guarantee rate specifies the minimum superannuation contributions Australian employers must make on behalf of eligible employees. And please note that, of course, if you are seeking specific superannuation advice, we do recommend and encourage that you speak to a financial advisor or an accountant, because that would be within taxation or financial advice, which unfortunately I'm unable to provide. But yeah. And of course, paid parental leave. So just to be very clear, paid parental leave is a entitlement that is usually sought by employees through Services Australia, or formerly known as Centrelink. So it's up to employees to apply for parental leave pay through us, and work out leave arrangements with you. So when I say through us, through yourself as the employer, and work out the leave arrangements. But from the 1st of July 2025, the amounts of paid parental leave offered by the federal government for eligible workers increased from 22 to 24 weeks. And from the 1st of July 2026, the amount of paid parental leave will increase to 26 weeks. So employees receiving paid parental leave for children born or adopted from the 1st of July 2025 will also receive a superannuation contribution of 12% of their payment. And the ATO will pay superannuation directly to an employee superannuation fund, and these contributions will be paid from July 2026 onwards. And in terms of paid parental leave, so employees can take paid parental leave before, after, or at the same time as paid or unpaid leave. So if your employee is a single parent, then they can get of their parental leave pay days, or choose to share some days with the other parent. And partnered parents will have some of their parental leave pay days reserved for their partner or the other partner to claim. So as I said earlier, payments for paid parental leave are dealt with by Services Australia. So what do I mean by eligible employee? So as an employer, you must provide parental leave pay to an eligible employee who meets all the following. So they have a newborn or recently adopted child. They have worked for you for at least 12 months before the expected date of birth or adoption. They expect to get a block of at least 8 weeks of parental pay within 1 year of the child's birth or adoption. They'll be your employee until at least the last day of the block of parental pay that you will deliver, and they'll be returning to your employment after their leave ends, and they also live in Australia. So you only need to provide parental leave pay once per child for each employee who meets all of these conditions, and we'll tell you the exact date you'll need to provide parental leave pay to your employee. So your employee may decide to get their parental leave pay in multiple blocks, and the Services Australia will only ask you to provide their first block of payments. So they'll provide any subsequent block of payment to them directly. And your employee's block of parental leave pay may change depending on their circumstances. So in some cases, you may be required to provide parental leave pay to your employee for less than 8 weeks. And Services Australia will continue to tell you the exact dates that you'll need to deliver parental leave pay to your employee. So I do encourage that if you are experiencing a situation in which an employee is seeking to get paid parental leave, we're happy to discuss that through the advice line. But the main information or details should be spoken with directly with Services Australia, given that it is an entitlement that the federal government provide. But happy to discuss any specific situation through the advice line if you require any advice, bearing in mind that Services Australia would be the appropriate personnel to deal with any paid parental leave entitlements under the federal government. And in terms of further information regarding paid parental leave, so as I said earlier, I think I did, the number of days reserved for their partner or the other parent depends on when their child was born or came into the care, and if their child was born or adopted. So between the 1st of July 2023 and the 30th of June 2025, 10 days are reserved. And between the 1st of July 2025 and 30th of June 2026, 15 days are reserved. And after the 1st of July 2026, 20 days are reserved. So parents can actually choose to take some parental leave pay days at the same time, and they can take either up to 10 days at the same time for children born or adopted between the 1st of July 2023 and 30th of June 2025, and up to 20 days at the same time for children born or adopted after the 1st of July 2025. So with all this information, of course, I guess the question that would be on the top of our heads is, well, where do we find the new wage sheets? Because with the minimum wage increase, well, of course, it would have increases when it comes to the relevant awards for us, being the plumbing award, building and construction, and the clerks award. So in case you're starting to stress about where you can find these new rates for these awards, you can access our wage sheets on the MPAQ website, and those are available online. So you just have to simply log into our website, and the new wage sheets in accordance with the increases from the 1st of July of this year will be available. Questions? Anyone have any questions for me? Great. Thank you.
Thanks, Clinton. Yeah, as I said earlier, if you do have questions, feel free to use the raise your hand feature throughout or put them in the chat. We can come back to Clinton if you think of any while Mick's talking. But Mick, I'm going to switch over to you now, if you're there. Cool. And I'm going to share Mick's presentation. So as I said, Mick King is from QLeave, and he's going to provide some updates and guidance on QLeave requirements when you're ready.
Yeah, just go to that first slide. Sorry, you've got control of it, Summer. So just go to the keep going. Okay. So hi everyone, Mick from QLeave. QLeave's your portable long service. Just a little bit of background. I'll run through these slides pretty quick, but I'll just touch on a few different points that I find people find more interesting, because there's a bit of benefit to them and it often gets overlapped. Yeah, so I'll do that. So QLeave, I would nearly think everyone, if you're working with master plumbers and you're in the plumbing industry, the building construction, you have a little bit of a hold on what QLeave is. But just to make you aware, there's three schemes within QLeave. Okay, so there's the building and construction where we all live, and there's also a corporate commercial cleaning and community services schemes as well, which they're labour quite different legislation. So we live in the building construction one, BCI. QLeave. The benefit of it is lots of workers can work for different employers and eventually get an entitlement, where we normally have to work somewhere for 10 years, get long service leave. The beauty of this is they can work for different employers and still get an entitlement. Next slide, Sam. Little bit of a snapshot there. I sometimes get the question, what's going on? Are you actually paying anybody? Well, we actually pay out a lot of money. Okay, so there's a little bit of a snapshot there, how much we've paid over the number of workers we have in the scheme and number of employers. And obviously employers come, employers go, and so the workers, and we're in charge of keeping that scheme up to date and administering the scheme. Next slide. So how the scheme is funded. Okay, so for every project over 150,000, the owner is obligated to pay a 0.575 levy, okay, to the fund. And then we keep that money. We give a little bit to CSQ for the training, and we give a little bit to workplace health and safety for their money. And but we keep most of it, and we invest that money, and that's what funds the scheme. So there's no cost to the employer. There's no cost to the worker. Okay, we've already got the money. We've got a big shed down here at Northgate full of $100 notes and $1,000 notes, and that's what funds the scheme. Okay, in the workers' memberships, there's only service credits. There is no money. It only becomes money when they make a claim. Next. Eligible. So workers in the building construction industry. This is probably one of the points I was going to labour on a bit. Who's eligible? It's your PAYG staff, your apprentices, any of your direct workers. If you've got labour hire, or if you've got labour only sole traders, then you need to put the service in, register those workers and put them in as well. Okay. One of the big questions I get is around working directors. Over the years, QLeave has often changed the way they've interpreted working directors. So I always tell employers to just revisit that and make sure if you are a working director, which means you're the director of the company, but you're also a requirement to be on the tools, and you're directly supervising workers, you may be eligible to join QLeave and get service credits submitted. In the past, like I said, QLeave have not always accepted everybody because of the way they've viewed it, and that view changes from time to time in regard to how they'll pay, and then whether we kick them in or out. So just have a look at that, and whether that's something you need to be concerned about. Next, someone. Oh, that's just a bit of a snapshot on how it basically works. So after 7 years, there is a pro rata. So if workers leave the industry, they want to go drive a truck or do something else, there still may be an entitlement after 7 years, but generally it's that 10 years of service where it becomes a benefit to the worker. And it just keeps accruing as they stay in the industry every year. Every year they get another 4.3 days of service added on to their membership. Okay, so here's what employers' obligations. So employers are obligated to register for QLeave firstly, and then submit their worker service returns at every year. Okay, so what they do, they log on, they add any workers you've got first, so which is the best way that's the better way to do it, is to add your workers as they start with you, but generally you need to start all your workers, and then you go in, tick your returns for each worker and submit those returns to us. We give you the end of 31 of July is the cut-off date. Okay, so we like to see it all done by then. Otherwise, we start doing a ring around and a few reminders, and not that we beat anyone up, but you can be be fined for not doing it. But really, we're here to help you get it all sorted out and get that. Otherwise, all your workers will be coming to you, and if they don't get the service, that's our instruction when they ring here. Go to your employer, so you'll have more going to you. The other tip for is for employers claiming reimbursement. Okay, so anytime an employer pays, if they've got a long-term employee, they've got more than 10 years with that employer, our advice to that worker is always, claim your long service through your employer, because you usually get a better benefit out of it. But as well as that, we always tell employers, make sure you claim, if you've paid out worker, make sure you do your claim to get some of that money back, help you with your liabilities there. So in my time going around, I've seen so many employers not realise that, and you've only got 2 years to do that from when the claim's made. So outside that, we may not pay you, reimburse you for that money that you've paid out, and it can be a lot of money over time. Just a tip for, like I said, add your workers as they start, and also ask the workers for their QLeave number when they do start. Thanks, Summer. Okay, so that's just going the same thing. Annual worker service, make sure you jump online and do that. They should have been lodged by the end of this month. Yeah, it's quite easy to do online. It's penalties, like it says there, penalties apply, but really we just want to help you get that return in. We don't really want to beat you up, other than the only time that sort of happens is when you tell us to go jump in the lake, and then we get a bit angry. But apart from that, we just want to help you understand your obligations. Thanks, Sam. That's pretty much saying all the same stuff I just said. Maintain your register throughout the year. If you have workers leave in the middle of the year, before the end of the financial year, you can go in and terminate and update their service throughout the year. Helps them out. Even though it's the employer's obligation to update their service and submit the credits, part of my role is we go to work sites and we're always trying to educate the workers and make sure they're keeping their details up to date. Okay. One thing we suffer from is a lot of workers end up with duplicate memberships, and that becomes an issue for them and us. If you have 2 memberships, you can easily have one be shut down. If we don't receive service submitted into that membership for more than 4 financial years, we'll shut that account. And then it's not always easy to reactivate those accounts and have them merged together. So we're always asking them to check their service online, and also follow up on any missing service. Digital updates, yeah, that's just so you can, if you fall asleep today or whatever, all our stuff is online on the QLeave website. There's nothing there in regard to the worker service returns. There's even videos and a couple of different ways of explain it to you how to get that, lodge your worker service returns. Just the QLeave details there. I've also, Summer and the master plumbers will have my details. So if any of the members there need my details, they need assistance with lodging their worker service returns or anything like that, I'm sure Summer can help pass those on to you. you can go through the call the call centre here. But sometimes they can be quite busy, and but also if you've got particular problems, I'm happy to help too. I often go out, and most of my role is going to work sites and talking to workers, but on different building sites and such. But also go and talk with employers and help them navigate our website and if they have any issues as well. Thank you, Doug.
Cool. Thanks, Mick. I'll bring Clinton back in. Looks like somebody is typing a question, so we'll wait for that one to come in. But thank you to both of you in the meantime for your presentations today. We will send out, as I said, we'll send out the recording for this webinar to all of you in case you missed part of it or you want to rewatch it at any time. It will also go up on our website, and we'll make sure to include things like mixed details and some information about QLeave. Rachel, did you have a question? I think she might be typing it. Oh, there it is. It's for you, Mick. I have a question regarding workers that have moved interstate. Does their long service leave continue, or do I need to set them up as a new person in Queensland? So moving into Queensland.
Yeah, so how it works is they're all state-based schemes. So they'll have if the work's done in Queensland, then they'll need a QLeave membership. Okay, if they've got a membership in another state, you can't actually merge them all into one account, but we do add them all together. Okay, so if they've got 5 years down south and 5 years here, that's still your 10 years. So those workers need to keep their service updated with every state that they work in. Okay, Dave. Yeah, but you'll have to start a Queensland membership.
Great. And there was, sorry, I'm just muting somebody. There was one other that came in. Adrian, or Rachel, sorry, did follow up. Does she need a note? Does she need to note somewhere that he has 5 years in New South Wales?
Is it with the same company?
We'll wait for her to respond to that. In the meantime, Adrian, no.
So if they worker that has service in another state, they just need to keep that state updated with their details because they will also try and cancel your membership if they don't hear from you. So it's a matter of getting in contact with that state and let them know that the work's currently being done in Queensland. And then when they go to make a claim, there'll be a section in there to put in the interstate number, and that's when we contact those other states and drag that service across for that worker to give them their long service leave. So, yeah, but generally we just look after Queensland.
Cool. And I know you mentioned a little bit about working directors, but Adrian asked, are directors of a company entitled to QLeave? Yeah,
so as long as they fit that, they might be the director of the company, but also if they fit the criteria of a worker, which means there's an obligation for them to work on the tools or they're directly supervising other workers the majority of the time, then they can be eligible for QLeave service credits. Yeah, because not only they wearing two hats, the employer, but also they are an employee of their own company.
Cool. Somebody did say what qualifies as a working director. So you did kind of just say that, but does proof need to be supplied, and can it?
Oh, what they do when they register, we ask a few different questions. Yeah, when the membership's going through the actual when they start them as a member, because they flag as a working director, we may ask them for a bit more information to make sure they fit that criteria. If they're just a working director that plays golf 4 days a week, then they might not fit the criteria. But if they are actually supervising work, and it doesn't mean working directors can't have other roles where they're dealing with clients and other administrative roles. It just it comes down to majority of the time if they do that supervising or the work themselves. Yep, they can be eligible.
And Kayla, Kayla asked, can it be backdated? So if they haven't
Yeah,
realised.
So I probably should have mentioned that. You can backdate service. Our Act says you can backdate up to 2 years from your first registration. Unless there's special circumstances, you may be able to even backdate further. So it's really that is a depends on an individual case, but they may be able to backdate further.
Are those ones probably better off speaking to you directly about the circumstances?
They can call QLeave about that, or call me. One bit of advice I always give people is, because when they do the backdating, they'll do the 2 years. They don't ask too many questions, but to go back further, they may need more information. Or if it does get knocked back by QLeave when you do the missing service, there's a review process, and I always tell people, make sure you go through that review process.
Cool. Okay. If anyone else has any other questions, feel free to speak up now or pop them in the chat while we wrap things up. But as I said earlier, thank you to both of you for presenting today. There was a lot of information to take in, so feel free to rewatch the webinar once we send that one out to you. And we do have the MPAQ advisory team available if you do want to understand any more about the initial queries, the wage rates, all that kind of thing. As Clinton mentioned, all the updated wage rates are on the MPAQ website. You just need to log in to your member dashboard and then follow the employment and wages button on the right hand side of the screen. That is all the time that we have today, or that's everything we have to talk about, I suppose, today. If you're interested in any other events or online webinars and things like that we're doing, feel free to jump onto the website mpaq.com.au/events, or just click on the events button on the top of the page, and you'll find all the details about the upcoming events that we have going on. But otherwise, please let us know if there's any other way that MPAQ can be of further assistance, and I hope you all enjoy the rest of your week.
Thanks very much,
Thank you.
Thank you.
Thanks, everyone.